financial literacy, and the human condition. Welcome to Financial Fitness with the Money Doctor, Dr. Francis Rayam.
Hi, it's Francis. I just wanted to take a minute to thank you for watching this video. If you're catching us on YouTube, please help us help others by clicking like, subscribe, and all notifications so you don't miss any videos. And check back for the next video. I think you're going to love it. Thanks again. For more information, you can visit us at hugyourmoney.com.
Welcome to Financial Fitness. I'm Jess Tyler, along with the Money Doctor, Dr. Francis Rayam. Hi.
Hi, Jess. How are you?
I am good. I'm freezing. It's been so cold lately, but good besides that.
Yeah, we had lots of snow here in Massachusetts. Snow and then ice, right? Snow and then ice. Anyway, I thought what we might do to take our little snow day time here is to promote a little financial literacy and actually go beyond our general financial literacy into financial fluency, what I would call financial fluency. So if you're fluent in a language, you know, everybody knows what that means, right? I'm fluent in French, I'm fluent in German. It's pretty impressive. But it also affords you an opportunity to understand things better. If you're traveling to Italy and you are fluent in Italian versus your little, you know, book that you have some phrases in, you're going to have a different experience, right? You'll feel more at ease. You'll be able to communicate with people. You'll be able to, in fact, argue with people successfully.
Right.
I remember when my brother was studying French and he had one goal. He said, I just want to become so fluent that I could have an argument in French.
That's funny. I took 3 years of French in high school, and all I remember are the curse words. That is it.
Well, you could probably get an argument started in French.
Exactly.
But I don't know who's going to bail you out of it. It won't be me, that's for sure. So I'm telling this story because it is the same about financial fluency. Although, you know, that sounds really difficult, right? It sounds hard. But that's one of the obstacles people face. And especially in this environment where people are saying to me, they feel sort of helpless. They feel a little out of control. They don't think they know what's going to happen to their money. And they don't love the sense that they're just, I got a guy or a woman who does that, and I just trust my financial advisor to make the right decisions. And they ask me questions like, you know, do you think we're going into a bear market? Are we going into a bull market? How long do you think it will last? And so, you know, people are trying to make their decisions based on these buzzwords, on this lingo that gets thrown around. And it essentially is akin to what you're saying. You know all the curse words, but not what to do with them, right? So, yeah. So I wanted to talk about this. I'm going to call it financial fluency.
Okay.
I don't know how much of this we'll get through in this show, but there's always more. So I would love to invite people to give us a little feedback about this because, as you know, a lot of this show is often about very basic knowledge, very psychological terms about how we deal with money and what makes us good or bad with it. And all of that is still true, and we're still doing a lot of that. But I think having some basic knowledge of the terminology would help you. Now, this started for me, Jess, as my initial thought is as I come up with these show ideas, whatever, in the shower or in a meeting or driving my car, like everybody comes up with their creative thoughts in different ways. My first thought was I should do a show for small business people about understanding how to get your money in order to help you with your small business. And that came from, as many of my ideas do, a recent phone call I got from someone who actually has started a small business from their home. They're quite successful at it. They tripled their revenue last year, which is a pretty great goal for at any rate, right? That they obtained. And so, or that they attained. So they called me saying all the right things. And I said, boy, you sound really grounded. I can't wait to work with you. You really sound like you know what you're talking about. And the person said, no, that's why I'm calling you.
So I can figure it out.
I'm making money and I'm building this thing. But they said a very interesting thing to me, which got me emotionally and caused me to start to think about this terminology that I take for granted, like someone who's fluent in a language, right? And what they said is, I started this business, it's doing really well, but I don't want to, you know, take the risk of damaging something within my family because I didn't know what I was doing.
Yeah.
That to me was very interesting because they clearly were in this business in order to be able to stay home with their children, grow the income, really help out in the family, but they were starting to get worried that they didn't know what they were doing. And that came at tax time. And
Oh,
at tax
yeah.
time, small business people understand, especially at tax time, that, oh, they didn't have enough put to the side for taxes. They didn't understand how much would be paid in taxes. And bam, they had a wonderful year and now they owe money. And because
Hmm.
they didn't see that on their radar, they don't have a lot in savings usually. They've spent most of their money back into the business. So that started this whole thing. And we could do a whole show on just business terms. But it did occur to me that in addition to being a small business person, this person was also a parent and
Hmm.
was also a family member and somebody who brought their kids around and was trying to raise their kids with certain values and they were lacking, although they were doing well at it, they were lacking this very basic foundation that I think
Hmm.
we should all have. So, so I'll throw out some terms and we can talk a little bit about them. But mostly what I'm trying to get, what I want people to get out of this show is a better sense of understanding in general when they hear this on the TV or the radio. When they hear, boy, inflation is up. What does that
Hmm.
and what can you do when you understand it to protect yourself, to counteract, to benefit from it? Right? You can actually benefit from certain things if you know what they mean. Above all, what I'd really like people to be able to do, this is like the top goal. I'd like you to be able to have an argument with your financial planner, know what they're talking about. Okay.
Right. Yeah.
A vicious argument. I just mean when they say, gee, well, I think your risk tolerance is really good and you're in a high risk tolerance zone, and I'd like to make these investments for you that will fit with your high risk tolerance or your low risk tolerance portfolio. That you have a semblance of knowledge rather than just like, okay, yeah, I like to go to the casino. I guess I'm high risk.
Hmm. Do you think that sometimes people get into these conversations either with a financial planner or with other people and they get embarrassed if they don't know what the term is, so they just kind of go along with it?
Yeah. Yeah. Even if
Yeah.
it's not full blown embarrassment, who likes to say, wait, I don't know what you're talking about?
Right.
Yet it's maybe the best thing you could do is to say, stop. Remember, you pay these people to work for you.
Hmm.
Even if you're not paying them out of pocket, they are getting paid to work for you. Now, it's a little weird because they're often getting paid by an insurance company or an investment company, and you're not feeling
Hmm.
that you're paying them. So you have a sense of my financial planner is doing a great job for me, and I don't want to ruffle any feathers there. But I do think it's really important to say, and here's how you can say it. I'm a person who really likes to be involved
Hmm.
in the outcome of my life. And so let's just make an agreement that when you're telling me stuff and I don't understand it, I need to be able to ask you, and you need to be able to be patient with me. Tell me in more than one way until I get it. Speak to me in accessible language so that I can understand what it is. Don't say dumb it down for me because it's not anything about being dumbed down. It's just about
Hmm.
learning terminology and what it means. Okay. So I think you're right though, Jess. The the resistance we have to being belittled or looked upon as not intelligent or less than or inexperienced or
Hmm.
distrustful, those are all barriers to asking your planner or even to having a conversation with your friends about money. Almost everybody will tell you they know somebody other than them who is really good at money.
Uh-huh. Yeah.
My sister, my brother, my friend, my teacher, my doctor, they're really good with money. You
Right.
don't really have any idea other than that they have more money than you have, and they
Hmm.
maybe throw some of this lingo around. Okay.
Right.
That doesn't
They
mean
sound
they're
really
good with
smart.
money.
Yeah.
That's right. That doesn't mean they're good with money. Okay. So let's just start with inflation. Okay.
Okay.
I think if we said define inflation, most people, you can tell me what you think most people would say too. I think most people would say, I can't afford stuff. The prices of everything is going up.
Hmm. Yeah,
Well,
that's what I would say is that everything, like right now, the cost of eggs, it's because of inflation.
that's right. It's absolutely true. But from a financial professional standpoint, we use things like the CPI or the WPI, right? The Consumer Price Index or the Wholesale Price Index to assign a rate of inflation. Do you need to know that? No. But what you do need to know is that inflation isn't just prices going up. Okay. An
Hmm.
influx of, what do I want to say? Like an increase of the country's monetary, of our money can cause inflation, right? We
It
print
has
more
something to do
money.
with supply and demand too, right? Is that what you've said before?
It does have to do with supply and demand. But
Okay.
the thing I want people to recognize about inflation, yeah, and everything has to do with supply and demand in a roundabout way. But the thing I want people to recognize about inflation is that it's a decline in your purchasing power. So,
Okay.
although inflation is the term I'm talking about, the thing I want you to remember is you can't afford to buy stuff, which means you have a decline in your purchasing power.
Okay.
In other words, your dollar doesn't have as much power as it had because
Hmm.
of inflation. So if things are costing you, this is a ridiculous number, I hope. If things are costing you 10% more than they did before, your dollar is now worth 90 cents,
Hmm.
right? So that's an important thing to understand in the big picture of things because it translates into your savings,
Right.
not just what you can buy, but what your savings are doing in relation to what you can buy. If
Hmm.
your earnings were growing at a certain percentage before, let's say 6%, right? And you thought you were doing okay because inflation was at 3%, so you were out earning or outpacing inflation.
Right.
When inflation goes over that limit, if your earnings are still sitting there at a fixed 3%, you are now losing money.
Hmm.
So it isn't as simple as just, wow, inflation is terrible. I can't afford to put gas in my car. Translate that in your mind to my dollar is worth less, and I'm actually possibly losing money, which means I need to go look at my investments again because inflation is up.
Right.
So every term will be interrelated, and that's what makes it so difficult, I think, to understand this stuff without taking a full-blown course in economics, right? But just start to think about the way that works. There's a yin and yang to it, an ebb and flow.
Okay.
Inflation goes up. What do you look at? Geez, I better not just look at the price of eggs. I better also look at what I'm earning. Do I
Hmm.
have to adjust in some way my portfolio in order to make that work? Right? So, so inflation. I know
Yeah.
we have lots to talk about. I just want to hit one quick little thing before we take a break, and it's net worth. All right. People are always talking about what's your net worth. And I
Hmm.
ask this of people, and they start telling me what their house is worth and things like that, and they add up all their assets. But your net worth is actually subtracting your liability from your assets. So if you own a house that's worth 300,000, but you owe 200,000 on it, that portion of your net worth is $100,000.
Okay.
Your
So
house is
there are
worth
many
300.
cases where your net worth could be in the negative then, right?
That's exactly right. There are people
Yeah.
who have lots of people and lots of businesses who have negative net worth. And
Hmm.
and we have these terms to be able to quantify the value of something, the value of your net worth as a person, the value of a company's net worth, so you can decide whether you want to buy their stock or not. So yeah, net worth is your assets minus your liabilities. Okay.
Okay. Let me get your phone number because I feel like after this show, people are going to have a lot of questions.
Yeah, our phone number for some more numbers is 413-773-3333.
And you can go to hym.com, no, hugyourmoney.com to get all the information there. You have it spelled right out. I like that. We'll be back with part 2 of Financial Fitness with the Money Doctor, Dr. Francis Ram on WHMP.
Financial Fitness with the Money Doctor is underwritten by Franklin County Technical School. We build futures. Visit fcts.us or call 413-863-9561.
Welcome back to Financial Fitness. I'm Jess Tyler along with the Money Doctor, Dr. Francis Ram, and we are getting fluent in money today.
We're trying. Okay. And at least this is the beginning. If people like this, we can do more of it. The hope here is that we can make it conversational enough to not be so dry and so afraid of it. But it is like learning a language. You know, there are times when you're going to need to conjugate a verb, and nobody likes to do it, but it's got to be done. And that's the work we're doing here today. Yeah.
And the more you talk about it, the more knowledge you get, like with anything. But even from you and I starting the show, like I couldn't have told you before, I don't know if I can now, but the difference between an annuity and a CD or
Mhm.
some of those things. But when you start talking about it more, then, you get that knowledge.
Yes. The problem with finance, if you want to call it a problem, the difficulty is that it's such a broad area. Nobody
Hmm.
knows it all. You know, you might be an annuity expert, but you don't know anything about the lending market, right? A mortgage market. Or you might know mortgage, but you don't know stocks. And it's so, it is so vast that people become an expert in their area. And
Hmm.
it's really not necessary, believe it or not, in order for them to get those licenses to know a lot of this other stuff. It's you'd have to be well, you'd have to be in school a long time to do this, right? So so there is a tendency to think of people who are better at money than you are, or who have a profession that revolves around money,
Hmm.
like a mortgage broker, for instance, to assume that they know all this other stuff too. And I can tell you, as having many people that are professionals as clients, uh, what I've just told you is absolutely true. You will not always know everything about finance. And some of the stuff, myself included, sometimes I'll be in an area and I'll just say, teach me about that because that's not what I'm an expert in, right? Tell me
Right.
something,
Yeah.
explain that to me. So if I can do it, you can do it. Stop the person and say, explain this to me like I'm a 6-year-old. Okay, I need to understand what that really means. Okay, let's talk about liquidity. Here's another simple one, right? We'll throw out some simple ones to begin with. Liquidity. All liquidity is uh, the ease of which you're able to convert your assets to
Into
liquid,
cash.
to cash.
Okay.
Okay.
Yeah.
So when I say to
I
people,
knew that one. Woo
you
woo.
did know that one, yes, and you know lots of them, and this is part of the exercise is to to celebrate the things that you already do have under your belt and to bolster your confidence a little bit when you're having a conversation with someone. Don't let them
Hmm.
talk down to you. You know lots of things they don't know. It may not be the monetary terms, but you know lots of things the other person doesn't know. Stand your
Right.
ground, okay? And participate in your own financial wellness. Okay. So, um, the ease at which you convert your assets to cash. So a lot of times when I ask people how liquid they are, or here's a real life example, right? What are you going to do when you retire? We're going to sell our home. That's where all our money is, in our home. Where are you
Hmm.
going to live? We're going to rent a place or we're going to buy another home. Okay, then that's not a liquid asset. That's money you're going to exchange from your home here to your home somewhere else, right? You're
Right.
going to
Yeah.
downsize. Maybe some of it will be converted into cash, but in general, real estate is not considered to be a liquid asset. It takes
Okay.
time to build these properties. It takes time to sell these properties. You can't just decide tomorrow, hey, I've got $300,000 in my house and I want to go buy this car. I'll just buy it. Not
Hmm.
without another loan, like a home equity loan or, a cash out refi or something in order to get the money out of that property, which is how those things became very popular. You're not old enough to remember it, but I am. A time when home equity lines didn't exist, or at least they weren't popular. And whatever you owed on your house, you owed. And if you had equity in it, the only way you got it was to sell it. And then
So you couldn't
people,
get,
that's right. And then you
yeah.
probably do remember the advertising campaigns that came out saying, access the equity in your home as your savings, right? So that you could take a home equity line of credit, take a loan against the equity in your home, and use that money for something else. But that is in fact not liquidity, that is debt.
Didn't we talk about this before? Did you say, or am I just making this up, or it was some kind of fever dream, that a home equity loan is the same thing as a second mortgage?
Yeah. Yes, I said it. It's not a fever dream.
Okay. I've got you in my head at night. Okay. Annuity, CD, CD. Okay.
I'm really impressed though, because while you were saying that, I thought, oh my gosh, what have I said and how has she remembered it? So great. This is exactly what we're trying to accomplish. Yes, a home equity line, I don't care what fancy name you label it, is
Hmm.
a second mortgage on your house. It is secured by your home. Okay. So that's not liquidity, that's debt. Just because you could take
Okay.
the cash, it isn't, hey, I just went to my savings account and pulled the money out. Right now you have a payment you have to make back on your
Right.
home equity line. So it's debt. Okay. Bear market versus bull market. Okay. So now we're into the investment side of things. Now, if I
Hmm.
were to ask you, can I put you on the spot and say, what do you think
Sure.
of
Go ahead.
bear market versus bull market? Tell me how you describe that.
I'm not bad at this particular area. Bear market is when things are going well and a bull is bad, or is it the opposite?
I think that's what
It's the
most people would
opposite.
say. I think
Okay.
most people, the opposite, but it would depend on your perspective, right? Some
Okay.
people love a bear market because it means that stock prices are beaten down and that gives them an
That's
opportunity to buy at a
to
low rate.
buy. Yeah.
Other people love a bull market because they're fairly aggressive and they're benefiting from that, right? So that's the point is,
Okay.
it's not just how you define these, but it is how what they mean to you and how you utilize these. So a bear market, for instance, is a declining stock market with high unemployment, right?
Mm.
So and we could be well, never mind what we could be doing. We might be getting there soon. We don't know. Um, but I want to say there's falling share prices. So you have, high unemployment and a declining market. That's a squeeze, right? You're going to feel that sort of squeeze, right? And then it has to be done over an extended period of time. I make my little notes so I don't get
Why did we name
too
them
wordy
bear
up.
and bull? It should have been like a mouse and a lion, so you'd know like the mouse was the low area and the lion was the big, right? Wouldn't that have been easier to figure out?
Well, somehow I think a bear seemed to be more reticent than a bull in its
Okay.
approach. But that's a good question. Maybe we should Google that exactly why those terms were chosen. It's a good question. So a bull market is the opposite, right? It's a rising stock market with a low level of unemployment and an increase in the stock prices. So I think a lot of people do say, a bull market is when the market is on fire over a long period of time and you can't lose money because the stocks are going so well.
Hmm.
If you're in those stocks and that's what your attitude is, then you love that. However, you might have heard bonds and stocks, right? Bonds move one way when stocks move another. There are people who like a bear market for certain reasons. So it
Hmm.
isn't that one is good and one is bad, but I do think I asked you for that and I appreciate you giving it to us
Oh, no problem.
that that's a real reason that people think that. Yeah. Um,
Do you watch The Price is Right ever? Have you ever watched Price is Right?
oh, years ago. Yeah. Is it still on?
Okay. Yeah, but I always think about the little guy that used to go up the mountain and like if you guessed too high, he would fall off. That's what I feel like with the bull market. Like if you don't get out at the right time, like you're just gonna fall right off that hill. So it just makes me a little nervous.
Well, okay. So
I think of it as price of right terms.
it has to do with your risk tolerance and your
Hmm.
asset allocation. Two more terms that I want to get in at least before we're done here today. So your risk tolerance is just your comfort level at which
Hmm.
where can you be comfortable if there are market swings? Let's suppose you go into a bear market. Uh, is your risk tolerance able to handle that? Do you
Hmm.
have enough maybe equity hanging around or loose money hanging around that you can tolerate waiting for a bull market to come back?
Yeah.
Do is your risk tolerance such that you can stomach buying stocks at beat up prices and sitting on them and waiting for the bull market to come back? Because that's what you might see in a bear market. You might have that opportunity,
Yeah.
but
I
not
have a
everybody
coworker
can do it.
here. I have a coworker here who does this. He puts money into the stocks and he's really good at it, but over any given period of time in a couple months, he's lost anywhere from up to like 27,000. He'll gain back like 17,000 the next day. I would be in the therapist's office every day. Like, I don't know how he's okay with this, but he's kind of made back everything he's lost and he'll gain like a bunch and then he'll lose. I like, forget it. It's a lot.
So without knowing that portfolio, that does not sound like somebody who's really good at it. But
Oh, well,
but
maybe
I
not.
but I understand what you're saying, and he might be really good at it. That might be a
Yeah.
very small portion of his portfolio. He may be
Hmm.
trading, might be day trading or short-term trading, and he may
Right.
have the stomach to do it, and he may really end up okay in the end about that. But if what he's really doing is making, losing, the idea is to make money. Did
Yeah, it's
I
like
say
people
that?
that
The
play the
idea is to
yeah,
make money.
make money. It's like the scratch tickets when people always tell you the winning one that they got. I just won $500. Well, you didn't tell me the thousand you spent trying to get there. I
Yeah.
think it's the same with stocks. People say that.
Well, you've touched on something there, and that is more about emotion than risk tolerance, but it is a problem for some people. Not
Mhm.
everybody. A lot of people do very well with it, right? But
Yeah.
a lot of times it is I want the win. I love the excitement of getting the stock price at that, they'll chase a stock down or chase a stock up. Uh, yeah, there's some of that to be said that there's a sort of gambler's mentality about that, especially in the
Mhm.
day trading industry. Um, Oh, asset allocation and diversification I wanted to talk about in relation to your risk tolerance. So asset allocation. Okay, maybe the answer is in the question there, but what does that really mean? I'm allocating my assets. Allocating them to what? You're
Right.
allocating them to different areas within your portfolio. So how much is going to go to a stock? You're just categorizing, right? Asset allocation is another way of saying categorizing my assets. So I'm going to put a label on these and I'm going to say this much is going to stock. This much is going to fixed accounts or cash equivalents, right?
Hmm.
Or bonds or real estate or whatever types of assets, whether they're tangible, hard brick and mortar stuff like your house, or
Hmm.
intangible, like uh, like a patent or a trademark, right? That might still be considered an asset, but it's an intangible asset, right? You can't
Right.
touch it and feel it other than the little booklet they send you, right? So that's all asset allocation is identifying of breaking up and categorizing where your different assets are going to go within your portfolio. But we
Okay.
almost always talk about asset allocation and diversification as one term because diversifying is actually um, choosing many different paths for your money. So you could say I'm allocating my assets by buying this much in Apple and this much in Sears and this much in uh, um, I lost a Tractor Supply.
Yeah.
You could do that, but that would all be stock still, right? And so
Right.
that's maybe not diversified. You might have
Okay.
allocated your assets, but you haven't diversified. So diversification is about splitting it up so that you don't have too much of your portfolio in any one area. And it's said by financial professionals, it's not always the case, but it is said that that may help you to manage your risk tolerance and actually, over a longer period of time, your portfolio may perform better because of that diversification. Because if
So if you're
something's
losing,
losing money, something's gaining. Yeah.
yeah, okay, that's what I was going to ask you. Going back real quick, I don't want to run out of time, but going back real quick to the liquid, is that similar to where you should have like 6 months salary or however much individually you think you need if you were to lose your job or whatever? Should you have a certain amount that's always liquid?
Yes, but you always try to
Okay.
get me to give a number. Yes, I think you should always have some liquid capital. Capital isn't just another word for cash, okay, working money that you have. So you should
Okay.
always have some liquid capital because, and if you want to sound really smart, start talking about capital instead of money and cash, right?
Okay.
Because you never know what's going to come down the pike. We could have an emergency within your family. We could have an emergency within the country. Anything could happen and you may
Right.
need to get to some cash quickly. That being said, too much liquid cash is a waste.
Okay, so there's so much to this, and I'm sure people are going to have questions. I probably prompted 12 questions just by throwing stuff in there about the prices right. But let me get your phone number.
I love it. 413-773-3333.
And you can go to hugyourmoney.com. You've got all sorts of information up there, really easy to kind of get through there and be able to plug stuff in. Plus, I love too, you've got little videos up there that where you're actually in the video walking people through different things, which
Yes,
is
I'm always
fantastic.
I'm always there in video or in video or in person. And if people like this sort of thing, write in and tell us and we'll do another show with some more terms and work on our financial fluency.
All right, we'll be back next week with another edition of Financial Fitness with the Money Doctor, Dr. Francis Ram on WHMP.